Hi everyone, today we did get a massive outside reversal day. You can see we threw wicks to a new all-time high, got clean above all of these levels, and then gave it all back and then some. Now your 200 is your support down at 620.31, but let's take a look at all of the charts and data and see if this thesis makes sense. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. In news today, we got NVIDIA saying they are allowed to resume selling these H20 chips back to China. And on this news, NVIDIA rocketed to new all-time highs. NVIDIA continues to be an absolute rocket ship, just going up seemingly every single day. And this was no exception. This was a massive booster here. The US government prevented NVIDIA from selling to China, but now this is back on the table. One of these lower performing chips. It's not as good as those top tier chips, but China has proved they can do some pretty good things with it and that there is a lot of demand in China to be buying these from NVIDIA. So they hope to start delivery soon. And with this news, like I said, NVIDIA did have a massive jump into the 170s. And of course, we'll take a look at it later. Moving over to fear and greed, very little movement here, 76 to a 74. Just a slight step down, back to neutral on momentum, topping pattern starting to take place here. Extreme greed still on strength, breadth still extreme greed, but called ratio, no changes there. Continues to hover at very low levels. Volatility spiking up here over the last day, really 2 days on that one. Safe haven demand, still a slight step up there. And demands for yield are still very, very strong here in junk bond demand, still sitting in extreme greed. Moving over to earnings calendar. Earnings calendar continues to do super well here. You can see green across the board. Not super common where you see almost every single metric to be green, but the banks seem to be doing really, really well to start earnings. Tomorrow, pretty much all banks except for United Airlines and then Netflix here in the after hours on Thursday, a little bit in the morning as well. PepsiCo in the morning, fairly interesting. US Bank Corp, banks tend to report in the morning, and that's pretty much it here for this week. You get a little bit more financial institutions here on the Friday with American Express. You also have 3M, which is interesting on the staples side. Then moving over to the economic calendar, CPI data was pretty much in line with expectations. Core numbers coming in, continuing to look good. Slight step up from the previous numbers, but not as hot as was expected. So tariffs having a little bit of an impact, but not as much as was once thought. And the headline number, even the month over month, was in line with expectations. The year over year headline number was a slight step above, so kind of a mixed bag, but the core number is what we care about, and that continues to step down even with the tariff news coming in. So good on that. PPI tomorrow, that's pretty much it. And then the Thursday, you do have core and headline retail sales, as well as Philly Fed manufacturing. Not expecting a whole lot out of that. Would like to see retail sales accelerate if it's going to prop up markets a little bit, but I just don't believe that's going to happen. Moving over to Max Payne. Expirations here over the next couple days still slightly positive, basically unchanged from current, but then that Friday expiration is quite a bit lower, still at around 2% lower. So that has moved up just slightly, but not as much as you would want it to based on current pricing. So I'm expecting this to roll down into that zone a little bit more, especially after today's price action. Moving over to the charts, looking at that outside reversal day on the S&Ps, absolutely not what you wanted to see. You can see we tried to go higher, finished negative on the day, drifting lower in the after hours, getting below this consolidation, getting below that 9 EMA at 623.03, closing price 622.14. So below it there, looks like this is going to continue to sell. Momentum stepping to true bearish conditions here. RSI breaking below the SMA, a little bit of volume coming through. Everything says this rally is just dead. It doesn't have any more strength to go to the upside here. Don't love it. I would expect this to pull back here over the next couple of months. Is it going to break down dramatically immediately? I would say probably not. But understand Max Payne is kind of in that 608 area, which would take us pretty close to that next level in here, around 609.50. Got to go through that 200 on the hourly. That is an important level here for tomorrow. That's going to be 620.37, like I mentioned. And then my level here is 617.90, but tried to go higher, couldn't do it through wicks, big reversal. That is a huge bearish indicator and generally an indicator that this long rally is going to be done soon. Sometimes you get a little bit of a pop consolidation, but eventually this is kind of that indicator that the rally is done. Moving over to the Tasty charts here, you can see back into bearish conditions as you would expect, down to that 144 EMA, almost all the way down to that lowest ATR band already at 620.74. Makes sense that we're kind of hesitating there. Since we're already here, maybe we get a little bit of a bounce kind of in the 623, 624 area, and then we get a bigger continuation. Your trailing stop 624.94, so all the way up here around 625-ish or so. But I think this is probably the high. If we do even get into this zone again, that would be a double top likely likely. In my opinion, you can see big selling volume on the down candles. Everything says the selling has started, or at least it's very soon to start. Moving over to the NASDAQ does look a little bit better here. It was positive on the day, about 50 cents, but again, it still went a lot higher. High of day was at 560 all the way up here. Obviously, new all-time highs there, and then we finished back below the level, 557.23. Momentum bearish, RSI still bearish. Expecting this to continue lower here. Big outside reversal, hit that trend line, and then reversed from there. Not what you would want to see if this is going to continue higher here. And then, of course, in the after hours, just like everything else, continuing to drift lower. All the candles say bearish. Everything says bearish. Wouldn't shock me to see maybe a little bit of a bounce in here, retest of that trend line, and then continuation lower to that 200. Still have a lot of room before this is really structurally broken, but the fact that we tried to go so much higher and then we are giving all of that back to finish unchanged in the after hours, and actually a little bit more bearish now here in that 555. The close here for the Monday session was 556.21. So with this after hours price action, we are negative on the day. And then moving over to those tasty charts, of course, we are back into bearish conditions. Took out the trailing stop there, 556.40. We closed below it there on that final candle there. You can see the 55 EMA also breaking on the hourly chart. That was in there at 556, and now we are below that. Your next is the 89 at 555.02, and then likely that next ATR band to the downside, which is sitting all the way at 553.17. So do we see one more bounce, maybe a little bit more of a topping pattern? It's not impossible, but you can see big volume coming through, big spikes on volume, hitting that relative standard deviation on the volume indicator, and all of those candles did result in more selling. You can see it here, and then that last candle, big sell on that candle. So everything says a little bit bearish here. Structurally, we're not all the way bearish, but I would say the top is likely in at this point. Moving over to the Russell and the Dow, same thing here, except even worse, down almost 2%, even more after hours here. Same on the Dow, 1% here, breaking structure back below that level, 441.43. So I told you yesterday I was out of the Russell. I just believed this was the retracement and that we had a kind of left shoulder head, right shoulder in here. That has since broken. We're down to that next level, 218.13 is the next zone. Momentum bearish, RSI bearish, huge volume there. So everything says this is going to pull back at least to the 21 EMA, in my opinion, around 216.50. You got some trend support in here as well, but realistically I would stay out of this. This is a huge reversal candle. Usually there is more to come. You can see one here, consolidation, down move, way over through the VWAP, almost down to that 55 EMA, almost down to that next level here. This overall resulted in about a 4.5% down move from the highs. So if you did kind of get in around the top, 4.5% would take you to around here, 214 to kind of 215 range. I do believe there's a little bit more in here, and you can see after hours we're down about 50 cents there. And then, like I said, the Dow, the 21 EMA is your next level there around 435.92. And then looking at the momentum, RSI, everything looks bearish. You've turned truly bearish here. RSI definitely bearish, big down move through the SMA, big volume. Everything says this should go lower. Moving over to the Mag 7. The Mag 7, again, pretty much like everything else, tried to go higher and then just could not hold any of it, down a quarter. Back to the level, closed pretty much right at it, 330.67, closed at 330.89, and then after hours, 229.93, back below it. 9 EMA is still in there at 329.14. We're probably going to touch that tomorrow at least, and then the 21's your next zone there, 325.40. If this truly breaks structure to the downside, momentum bearish, RSI bearish, then I would expect this to push down to 315, and then if that starts to happen, then you're going to see something a lot more similar to this, where you have kind of choppy, maybe hang in there a bit, and then you're going to eventually see that breakdown bigger to the downside. Do we go all the way back down to these lows, all the way around this kind of 230 to kind of 240 area? It's really hard to say, but I definitely believe there's going to be a more substantial pullback, probably into this 300 area at a minimum. Moving over to Apple and Microsoft. Apple threw a wick to the level again at 211.55 and then finished very close to unchanged on the day, up just a quarter after hours, drifting lower. Again, I expect this to pull back at least to 204. Realistically, I think you're going to pull back into this range here, 193 to 194, with the high being kind of 196 in this range. That's the same zone we've pulled back to the last 3 times. Momentum hasn't broken all the way there yet. I do believe it will eventually. And then looking at Microsoft, hung in there really well, closed a 0.5% up, and then you can see after hours finishing lower there, 502.40, so down a little more than $3 in the after hours, giving all of those gains back for the day. Moving over to Tesla and NVIDIA, of course, these have a very different story, but Tesla's finally doing kind of what we thought it was going to. The retracement was a little bit more aggressive here into this zone, but then it did break down from there like I expected it to yesterday. Thought maybe we could go to here, but that was always pretty unrealistic. You can see ended up down 1.93, falling below that trend line here, and 9 EMA, a little bit of support in there around 307.75 or so, but realistically this is going to go to 301.93 at least, and then once that breaks I think that it's more likely that we get into that 280.06 area. Been watching this as kind of a wedging pattern, breakdown, retest, kind of breakdown. Depending on how you draw the lines here, you can kind of come up with your own thesis, but I think this is bearish. I think we're going to get a bigger breakdown there on Tesla. And then NVIDIA, of course, absolutely a massive outlier, huge volume, gapped up and dojied up 4% on that news that we talked about with those H20 chips. Moving over to Amazon and Alphabet, these have been doing some weird things. Amazon was basically a doji, still very much inside of the structure that we talked about yesterday. I do believe this will break bearish at some point. We just haven't really shown it quite yet. And then you got Alphabet hitting that target. We talked about once we broke 179 that we were probably headed to 185.22, and then we did touch that today. 185.41 was that target. Touch that level, and then do we reject from here and sell with everything else? Certainly a possibility, but structurally this is still bullish. You could look for a kind of push through here, but again, I would be bearish until 185 breaks. Otherwise, you're trading short here off of that level. If we get above it, that's your stop. If we don't get above it, then your take profit's going to be 179. If 179 breaks, then 170.95 is that next zone. Structurally, this is still bullish. You could argue maybe this is sideways consolidation, left shoulder, head, right shoulder. We've been talking about the head and shoulders pattern on the longer time frame. Eventually, that will culminate, in my opinion, and this will start to sell a little bit more aggressively, but we just haven't seen that quite yet. Moving over to staples and discretionaries, we actually got some good information here. This is an everything sell, and it's a pretty aggressive one, down 1% and 1.4% respectively. Both of these look terrible, and when you see these looking terrible together, that is usually a bad time for markets here. So big sell here, probably going to go through that next zone at 79.90, and then you can see the level here, 219.18. Once this goes, 215 is your next zone, and then you got some dynamic support in here around 212. But if this goes in here, then you have a ton of downside potential. You don't have any real support until potentially in here around 193, 194. This was a nice pivot point, maybe in here a little bit. 204 area, you got something in there, but you could absolutely get a higher low setup all the way down in this kind of 185 to 189 area, which of course is a lot lower from current price. Moving over to Breadth. Breadth is doing everything that we expected it to on a big sell day. I told you yesterday this was still kind of consolidating in here, and if this 55 EMA broke on the 50-day, that floodgates were potentially going to be broken, and that the Russell would potentially be the indicator for that. The Russell broke down massively today. Breadth broke down massively today. Huge moves on both of these. Very much a break of this consolidation. New low back below that 62.25 area. Pretty much everything here is saying get out. Markets are going to be moving lower. Moving over to the dollar. Dollar continues to do really positive things. We said this was a super bullish structure. We said this was a nice bounce off a long-term trend line. So far, so good on that. You got the 55 EMA that's going to be resistance at 98.90. Once we touch that, we might get a little bit of a retracement and then look for that better bottoming pattern. Buy the dip in here if we get one off of this area. If it shoots through there, you're just going to have to buy it because this is likely to be a ripper. When you see these kind of moves and there's no pullbacks on them, there's generally a ton of demand and people are buying that move. So the best moves don't pull back, which is a bit of a bummer, but if you don't see any pullbacks, it's probably going to be really aggressive to the upside. I don't know if that's going to happen quite yet. We haven't touched that 55 EMA in a long time, but certainly a possibility with how nice this has looked. And then a nice day today, up over 0.5%. Moving over to bonds. Bonds look terrible here, even with the equities going lower. Definitely an everything sell, not what you want to see. J&K down a third, TLT down almost 1%. This is likely going to go back to this low now at this point here around 82 to 83, and then does it go below that? I would say it probably doesn't, but in the short term, this does look quite bearish now, especially with the retest of that level breakdown. So bonds not in favor, still like them over the medium to long term, but like I said, short term continues to look bad. Moving over to the VIX. VIX looks really positive, which again is very bearish for equities. Looks like this is going to bounce in here. Held the 9 EMA test, finished positive on the day, about 1%. I think this is likely to go at least into the 20 area, as high as maybe 22 in here. And then if it gets through this zone here, then we're likely headed back to 28, which seems absolutely possible at this point. Momentum bullish, RSI bullish. Moving over to my accounts, I didn't do anything on the day, still holding these. covered calls. You can see it's falling a little bit after hours, which is what's making these losses. I was positive on the day, but in the after hours, you can see we're down a little bit more than $1. So that would be about $200 in losses on those shares, which should have been positive on the day with the 50 cents, which would have been up $1. And then you can see the calls were also positive on the day. So that should have been about $180 profit on the day. And that has given all back with the after hours movement. All of that still should be covered with this option all the way down to 525, tons of credit on there, very small profits. If we start to see some of those structures break down a little bit more on the Qs, then I'll definitely take off these shares. The Qs have held up really, really well. Tech is still in favor. It's still kind of a safe haven relative to everything else, but everything else is not the place to be, at least for now. So keep that in mind. Everything else is now selling and tech is not leading us higher. So likely to see markets moving lower, just still neutral here on the Qs, but definitely not bullish at this point. Let me know down in the comment section what you think of NVIDIA. Can it just continue to rocket higher while the rest of the market falls through the floor? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.